We just heard commentary from Fed Chair Jerome Powell on the state of the economy, but how will it impact all this loan borrowing? We're joined by SoFi CEO Anthony Noto to discuss all this. Anthony, great to see you. Big week for you guys on the student loan front. We'll talk about that in a second. But look, we just heard a more aggressive, more hawkish Fed chief. What does that mean for a business like SoFi?
You know, SoFi, fortunately, is a very diverse business because we've positioned the company to be a one-stop shop, to be there for all of your financial needs, the big decisions, and all the days in between. We operate across borrowing, investing, checking, and savings with high yield of 2% interest, the ability to invest in stocks or fractional shares without commissions, cryptocurrencies, our own proprietary ETFs, robo-advisory. And in addition to that, we also provide a credit card that gives you rewards back, and we double those rewards when you redeem them into investing or into loans. Because we have the diversification, we operate well in different economic environments. The demand for financial service products only goes up in times of volatility. Our job is to make sure we give our members the best choices for their financial needs. And right now, they really need to focus on reducing their debt, reducing their variable rate debt, creating discretionary income so they can keep investing in volatile markets. The biggest mistake someone can make is stop investing. They need to invest through the cycle in a diversified portfolio and to dollar cost average so that as the market is volatile, they can lower their cost of their investment because they're investing on the way down and on the way up. And those are the key elements to how to navigate a volatile environment.
That's a lot more services than when you originally went public, Anthony. I mean, when you think about really looking across what the market, what the consumer, what individuals need right now in order to manage some of those finances better, what areas are you seeing even more opportunity? Because we continue to look at companies right now and really assess where that next leg of growth is going to come in from.
Sure. We've benefited from that diversification. The last 5 quarters that we've reported have each been a record quarter for revenue. The strength that we've seen in the most recent second quarter was driven by personal loans. So people are refinancing out of credit card debt where that interest rate is going up as the Fed raises its rates into our personal loans that are fixed rate debt and they have a term. So you can spread your payments out over more years, which gives you more discretionary income to invest. We've seen really strong demand of people switching their direct deposits to SoFi so that in their checking account at SoFi, they get 2% interest now with no fees, no minimum spending requirement, no restriction on spending, and a really great rewards program on a checking and savings account. In addition to that, we still see people investing, and we ask them why they're investing. There's really 2 primary reasons. One, they want to take the opportunity to build positions in stocks that are down meaningfully, or 2, they underinvested in their 20s and they're looking to reevaluate and rebuild a portfolio that they should have built 10 years ago to get the benefits of compounding. In addition to that, we do have a really strong high credit profile in our credit card, and we've seen strong demand there as our value proposition is very differentiated than others because we give you the ability to double your points when you use our other products.
Anthony, it's Julie here. Let's dive into student debt now. And I just want to clarify, because this is something I admittedly did not entirely properly understand. When we talk about the debt relief that the government just announced, it affects loans held by public entities only, not held by the likes of SoFi. But there is, that said, a ripple effect that affects you guys. So talk to me about that dynamic and what was just announced, how it affects you.
Yeah. So for the consumer, the most important thing the administration did was make a decision on the federal student loan payment moratorium, because now people know, are they going to get forgiveness of debt? Do they have to repay their debt? And it's clear that they have to start repaying their debt in December. Some will get $10,000 of forgiveness. Most people have more than $10,000 of student loan debt. So those that will get $10,000 of forgiveness, they should look to refinance now that remaining portion of debt to lower their cost of debt. We can offer them a ability to save money because we offer a lower rate than their current federal student loan. So the demand for our refinancing of student loans is increasing meaningfully as people evaluate should I refinance now or later when the moratorium ends in December. And the Fed chairman just said they're going to continue to increase rates. And so the savings they can get today is going to be greater than what they would get at the end of the year. Rates are expected to go up 100 to 150 basis points. That could cut their savings in half versus what they could get today over the term of their loan being 5 to 10 years. So the demand should increase for student loan refinancing. That business was operating about 25% of where it was pre-COVID because of the federal student loan payment moratorium. Now that it's coming to an end, we should see an increase in demand. And that was factored into our forward guidance when we provided it.
That said, if someone has a publicly held student loan, they refinance it with SoFi. If there's any future relief, they're not going to be eligible for it. Is that right?
I believe that is correct. But what I would say is the United States student loan borrowers, federal student loan borrowers, have been waiting for years for relief. I think the expectation that there will be additional relief is a false expectation. Obviously, the administration could change their point of view, and there could be a different party that is in the White House. But it's very clear the progressive Democrats pushed for relief of all student loan debt. The president, who obviously is a Democrat, made the decision to just relieve debt for $10,000 for those that make less than $125,000. So if people are expecting another change or another form of relief, I think their expectations are not going to be fulfilled based on what we've heard from the administration.
I guess the interesting thing about this, too, that maybe we haven't discussed, or maybe there's too much weight I'm giving to it even in my mind, but the fact that you've got so many of those borrowers that are carrying the debt, and especially millennials here, too, that are starting to enter into some of their peak earnings years as well. You know, how does that impact the number of borrowers that are even qualifying for this relief?
The student loan borrowers that have refinanced with SoFi actually have an average income per person that is about $160,000. So it's actually above the cutoff that the administration established for student loan relief of $10,000 at $125,000. That said, we do have customers that fall below that, and there obviously are individuals that fall below that. So it will be a large sum for a portion of the United States, but as you mentioned, it will not apply to many, many people.
So, Anthony, you mentioned a little while ago, and I know you've talked about this on the calls before, that refinancing activity dropping to about a quarter of what it was before this whole program was put in place. Is it going to get back up to 100% of where it was before? What would be the timeline for that? And I believe, this is about a third of your overall portfolio. Is that right?
Our business now is very diversified. We have three business segments. We have the lending business segment, and student loans is a portion of that. We also have a technology platform with Galileo and Technisys. So we provide payment processing and core banking technologies. We call it the AWS of FinTech. And as I mentioned, we have our invest product, our checking and savings, as well as our credit card products and some other smaller businesses. So the student loan revenue is much, much smaller than where it was, several years ago. We do anticipate that it will go back to where it was pre-COVID levels. It'll take a couple of quarters to get there, but we're encouraged by the definitivity of the ending of the student loan moratorium, which should result in people wanting to refinance now, given the rates are likely going much, much higher by the end of the year, and they'll lose that cost savings over the next several years if they don't refinance now.
Anthony, SoFi stock's been going up in response over the past couple of days to that ending of the moratorium announcement. Thank you so much for sort of explaining to it, breaking it down for us today. Anthony Noto, CEO of SoFi. Thanks.
Thank you.